Welcome to Tuesdays with Gary. I'm Gary Lanham. I'm the team leader of the Gary Lanham Group at Coldwell Banker Fort Lauderdale Beach office. And every Tuesday, I try to bring information to you, my friends, my consumers, my clients, on what's happening in the real estate market, what's happening with COVID in the real estate market, and what educational things we should know about in today's market. So with the help of my videographer, Chitachi Egwu, who will be running the show today, she's my production person. She's in one location, and my very special guest, Donn Rubin, who's in another location, will talk to us today about the market. We'll also talk a lot about reverse mortgages, what they are, what they're not, how they can be useful, and as an investment product. So without further ado, I'd like to introduce Donn Rubin. Donn, welcome to the show.
Hi, Gary. It's always good to be here with you.
Thanks for joining us. Thanks for joining us. So I was looking back in my diary and I realized that you and I first started doing business about 16 years ago.
Exactly. Yeah. 2004, 2005.
Unbelievable, right?
Yeah. We look the same.
Yeah, we look the same. A little less, maybe a little less gray, but that's about it. So Donn, thanks for joining me today. I want to talk about that nice product that I keep hearing about. Tom Selleck is advertising reverse mortgages, and that's a product I think that many baby boomers perhaps don't understand very well. And perhaps you could give us a little history on that product, say in the 1970s, 1980s, versus that same product here today.
Right. It's 180 degrees from what it used to be. It is not only, as everyone knows of it, the loan of last resort, enabling a senior to stay in their home for as long as they wish. But it's also, and financial planners are beginning to really understand, it's an important tool of financial and retirement planning. It is also a great product for high net wealth people. The different things you can do with a reverse mortgage are, you can refinance your current home, pay off your mortgage, be able to stay in your home and never have a mortgage payment. You can also use a reverse mortgage for a home that's free and clear, giving you tax-free income. That's the key. Tax-free income that goes into a line of credit, earning interest, will make your retirement savings go longer and increase in net wealth. Also, and the thing for many of your clients and all the realtors at Coldwell Banker, is a reverse mortgage is a powerful product to purchase a home with. Just roughly, you can purchase a home for half the price cash. So many people now that are looking to move, they've been in their home 30, 40 years, they want to be closer to the kids. Well, the $300,000 they have isn't enough anymore. That home to be near their kids is $600,000. Well, with their $300,000 in a reverse mortgage, they can buy that home and never have a mortgage payment.
Wow, that's fantastic news. That's a lot of information very quickly. Before we kind of delve into it, I think you've got a slideshow here. Could you begin and talk to us about Fairway Mortgage and why that's a place people should look to borrow money?
Okay, well, with pleasure, I would do that. Fairway Mortgage is all over the country. We have boots on the ground, so to speak, in every city across the country. We have 8,500 employees. We are number 2, and the culture at Fairway is second to none. We get the loans closed still in less than 30 days. So it's important who you work with these days. So that's Fairway.
Okay, and so let's talk a little bit more about reverse mortgages. Who is eligible for a reverse mortgage?
Okay, very simply, and if you play the next slide, I think that's going to come up. The next one. I know we can go backwards. Just roughly, anyone approaching age 62 or older. Now, if they have a spouse younger than 62, that's okay as well. It's an FHA qualified home, which means it's a non-recourse loan. If anything happens that this home would be worth less than what is owed, the borrower or their heirs will never write a check. FHA will write a check. It must be your primary home, which means you must live there 6 months and 1 day, and it won't affect Social Security. And if someone's on Medicaid, they need to look into that. So roughly, the younger you start because of the tax-free line of credit, the more you're going to grow. Like we have high net wealth people now that use their tax-free equity to convert their IRAs and 401ks into Roth IRAs. Doing that at age 62, they have a lot of years for tax-free growth.
That's fantastic. So what is the process? Is it like buying a house? Does somebody have to come out and appraise the property? How do you assess the value, Don?
Yes, there still is an appraisal, whether it's a refinance or a purchase, but there are many less hoops to jump through. For example, credit score and debt to income do not matter in a reverse mortgage. You just need to be able to maintain the taxes, the insurance, the HOA fees if it's a condo, and general maintenance. So it is much easier to qualify for. In fact, many people who can't qualify for a forward mortgage will qualify for a reverse mortgage.
So I got a couple of questions then. So I bought my house 8 years ago for about $280,000. I had it recently appraised. It appraised for $514,000. My payment is about $1,500 a month. What benefit would I accrue by doing a reverse mortgage?
What's your current mortgage on? What's your balance on your mortgage today?
$200,000.
Okay, so you would get that paid off, probably another $55,000 to you,
okay,
and eliminate your mortgage payment of $1,500 a month.
So that $50,000 to me, does that come as a monthly payment, or is that set like a bank account that I can draw on if I want to?
It can be set up in a bank account, a line of credit, earning interest, tax-free interest.
Right.
You can take it monthly, or you can take it as a lump sum.
So with that $50,000, I'm staying in my primary residence, which is homesteaded. Can I use that $50,000 to purchase an income-producing property?
Absolutely, and many people do. And don't forget the $1,500 a month you're saving.
So that's an $18,000 savings a year. So that would be, if I had a rent shortfall, I could make up that difference. I could certainly pay the taxes that way, and I probably could pay the insurance too. So my income would be based on the rent.
Exactly. There's so many things a 62-year-old can decide to do. They can purchase a long-term care policy. They can delay taking Social Security till 65 and have this extra money to get them through. There are just so many options.
So I'm sure that you must have people flocking to this loan product. What is the best way to teach our customers about this, and how would you give me a suggestion to talk to my baby boomer friends on how to structure some kind of deal like this? How should I proceed?
Well, it's a long discussion because our brains are not wired to think in reverse. But Fairway has a webinar every Wednesday, alternating between consumers, realtors, financial planners and CPAs, attorneys. So we managed to put 4 webinars on a month to each different group, and they are so useful. And I have a lot of materials, and I meet with people every day to discuss reverse mortgages.
So let's talk about the credibility of Fairway. I mean, isn't Quicken the #1 mortgage source in the country?
Yeah, #1, they are.
#1.
Not #1 in loans done. We get a lot of loans that blow up there. They are #1.
And can you give us a ranking of Fairway in relation to the rest of the mortgage brokers?
#2, and I believe in FHA #1 or 2. And just to give you an example, in 2019, Fairway did $39 billion in sales. Through June 30th, Fairway has already done $41 billion. That's how much increased business there are. So this should be a $100 billion year for Fairway.
So that's amazing. So I remember Fairway kind of hit the scene, I don't know, was it 3 or 4 years ago now? Time flies. And I remember there was an aggregation of really the best mortgage brokers. And I remember talking to you about, that decision to go to Fairway, which was such a huge mortgage company. Can you tell us how you made that decision?
I hesitated. I was approached and I hesitated because nobody likes change. But the writing was on the wall. They attracted the best talent. All the infrastructure was there. I'm in the business like you are, Gary, of saying what we'll do and having to deliver on it. At Fairway, I am confident 100% of the time I will deliver on it or make it right. We still get a lot of our pre-approvals accepted over others because it says Fairway and they know we can close in 21 days. So Fairway.
That's a pretty important component, Don. I mean, I don't know what you're seeing with other realtors, but we're running up against multiple offer situations. My buyers agents are running hard, and it's not unusual for them to get 7 to 10 offers on a property. And one of the ways we've been trying to approach that is using something called an escalation clause. And the escalation clause, as you know, allows us to always, when a bona fide contract is presented to the proposed buyer, we represent the buyer. The seller, we will go over the bona fide offer by $1,000 up to a threshold that the buyer sets in advance. And we have found that has been a really effective tool. You got to be smart. You don't want your buyer to overpay. And then there's that appraisal problem, but it's a very effective way to go. Is that, have you been seeing that a lot in this market, Don?
Absolutely. The appraisals are not catching up to a lot of the offers. They're coming in under purchase price. And, then there's a renegotiation, but it happens all the time. There's a hot market and prices are rising. It takes a while for appraisals. But another thing one has to worry about, and where Fairway really comes in the leader, is that when this COVID first started in March, April, there were a lot of loans at every mortgage company that suddenly, in a moment's notice, could no longer be done. Either there was a second or a jumbo investor, and they either disappeared, they went under, or they scrapped the program temporarily. I don't know any other lender other than Fairway that did this, but Fairway portfolioed all those loans at their own cost and made sure every single one of those loans could be placed or they bought. That's the difference between.
I understand that correctly. Let me make sure I understand that correctly. So you're a mortgage broker and you're trying to get the buyer the best rate. And you found that during the beginning of COVID, March, April timeframe, that some banks had withdrawn, they were not participating in or interested in giving mortgages, but you had a very creditworthy buyer and you offered them was it a portfolio loan or did you call it in-house loan? Tell me exactly more about that.
Exactly. Just say they had a loan and that loan product disappeared. Because of COVID, they were no longer offering that loan. There was nowhere else to go. They were closing in 6 days. At every other lender, they lost the contract. They lost the home. They couldn't get it. The mortgage didn't exist. We made it good. We made sure every one of those people closed.
Wow, that's fantastic. So that to me would be your lead clause, as far as what business with Donn Rubin and Fairway Mortgage. I want to circle back to the reverse mortgages again, Don. And is there anything else that we need to know about them and how they work and how we can best benefit from them?
Yes, the most interesting thing for people to know, especially in their low 60s, to build a good portfolio is to understand that there's over $7 trillion in senior equity, which is totally worthless. You can't pay a doctor or long-term care. You can't pay any bills with equity. And the average senior doesn't have, I think it's over 40%, do not have more than $10,000 saved. So reverse mortgage is a way to really make your retirement dollars stretch and to build up the amount. It's really the best option in retirement planning today. Now, everyone might not qualify, but over 99% will see an improved scenario with a reverse mortgage than without it.
So if I'm reading that correctly, I would so you can start the reverse mortgage at age 62. So you bought your house at age 32. You had a 30-year mortgage. Your house is paid off. You then tap into all that equity, right?
tax-free equity. That's the key.
Tax-free equity.
Tax-free.
That's a whole different story, right?
Right. So picture this person has a retirement account,
Right.
and picture this since March during COVID. Their retirement account where they're taking distributions has lost 40%. Now picture they had a tax-free line of credit growing. They could coordinate the benefits with their distributions and avoid sequence of return risk. When the market was really down, instead of selling something to give them their distribution, take it from their tax-free equity. It's a win-win, and there are tax advantages as well.
So that's remarkable information to know. So I know that my financial planner has talked to me about reverse mortgages, and I was a little surprised that he even knew about it. Do you find that the good financial planners know about this, or are they still coming on board as far as the education process?
I think the very best of the best know about it, but even some good ones are a little late to the show, but they're learning about it. And I can say to anybody turning 60, if your financial planner doesn't know about a reverse mortgage, tell them to find out about it or get another financial planner. It's that important.
So let's shift the conversation a little bit, and if you don't mind, I'm going to try another angle here with you. So we have COVID going on. We have an incredibly hot real estate market. We have not much inventory, and yet we've got 50 million people that are unemployed. How do you see that playing out, Donn?
Long term, I think like we saw in 2009, with that many people unemployed, we're going to have to see less people renting, more defaults, foreclosures. It's bound to happen. But with interest rates at record lows, they've never been this low. And with so many people across the country wanting to come to Florida and such low inventory, I don't think you're going to see a change like we saw in 2009. Remember, in 2009, we were in a deep recession and a lot of people were hurting.
Right, right. So what about people who have lost their jobs and people who, for example, might be in a jumbo loan? Could they be in a different situation as far as what their loan product looks like and their ability to pay and how that would affect them?
Absolutely. And I would say during COVID-19, it's a moving target. Every product changes weekly, sometimes daily, for COVID-19 overlays, and especially for self-employed borrowers and jumbo loans. It's a new playing field. So it's very, very important to know your products and your guidelines all the time because they keep changing.
It's a never-ending train of learning, right? I mean, it's just when you think you got something, it changes again. And of course, it's so nice to have people like you who are nimble and understand the changes precisely so that we make few mistakes in getting our deals accomplished. So Donn, anything else about reverse mortgages you'd like to share with us?
I would like the opportunity to make sure you and your team and most realtors out there understand it, because we're finding on a national level that realtors that understand reverse for purchase are seeing 7 to 10 more closings a year. And you're helping a lot of people that your realtors don't understand and they themselves don't understand can save the deal.
So that's a pretty amazing number. So let's go back to that example of the 32-year-old who's had the mortgage for 30 years. They are now 62. They've got their house paid off. They've got all this equity, and their financial planner and their mortgage broker has pointed them in the right direction. And we've got this COVID real estate market, kind of on this roller coaster with some possible distress sales lining up. If I've got my house paid off and I got all this equity, and despite the fact that we have no inventory now, should I start looking at the possibility of owning an investment property now?
Yes, and you would know best if you can find one at the right price. But absolutely yes. I have a lot of people that with their untapped equity do a lot of things, some of which are buy a second home, an investment home, help their kids buy a home. In other words, they're giving with a warm hand instead of a cold hand, I'd like to say.
while you're still alive. So Donn, I really appreciate that information on reverse mortgages. Let's talk a little bit more about today's market. What are you seeing the real successful realtors do when they get their offers accepted?
Right on them. They're right on them. Bullet point by bullet point. They make sure the borrower does what they need to do in a timely fashion. The seller's in line to do everything, and they stay on top of it. And the good ones appreciate that we're in touch with them a minimum twice a week to update them every step of the way.
So it really is still a people business, even though Quicken can do it online, you don't really talk to a person at Quicken. You have to have a real person, a warm body, I do anyway, to feel confident that the transaction is being handled and managed. How does Fairway handle that process? How are those touch points handled?
Oh, fabulously. When I take an application, I usually have collected as much as I can that I need to issue an approval. It goes right to our setup team that within 2 hours scrubs the file and requests all the items like title, insurance, appraisal. Then it gets assigned to a processor who looks at all my notes, all my files, tells me or the client if there's something missing or if like the driver's license isn't clear enough, and it can go right into underwriting and we can have an approval in 3 days.
So,
now, the appraisal isn't back yet. The title isn't back yet. So it's a conditional approval, but that's okay. That.
So you and I are doing a deal right now, and I had a new thing happen to me in real estate. And the real thing and the new thing was that the appraiser pulled me aside and took a notice at some perhaps structural damage of a property. And on the first hand, I kind of thought he was stepping out of bounds. When I stood back and looked at that process, I thought he's doing nothing more than protecting my buyer. When did you guys get involved with that kind of scrutiny with your appraisals?
It's not us. Those are conforming appraisals. That's Fannie Freddie. I mean, if they can see something, I mean, they're licensed. It's their livelihood. If they can see something, they're going to notate it. And what you just mentioned can be even more of a red flag because it can actually be a structural defect rather than cosmetic. So all that means is it needs another look at it.
Right. So we do have a sandy soil basis here, and some of these older homes the foundations weren't necessarily that deep. So it was a little shocking to hear that news from the appraiser.
But it appraised very well. Other than that, correct?
It appraised very well. Yes, it did. Yes, it did. So, Donn, I've been telling you about this product that we've been doing. We represent Urban Village, which is this really fantastic condo project in Oakland Park. We have 4 different floor plans. They range in value from $313,000 to about $412,000. And we have a model set up there at 410 Northeast 36th Street, unit number 5. If you haven't dropped by there yet, I want to personally invite you to come and visit Urban Village, because you may know some investors that may want to buy here, or you may have some clients that are first-time home buyers that perhaps you could lead them our way.
Absolutely. I'd be delighted to. I look forward to it.
So without further ado, I'm going to ask Chitachi to run our latest little movie we've been promoting to try to get more buyers to this product. Sexy. What do you think, Donn?
I thought it was terrific. I can't wait to see it. Very well produced.
You got to come by. So I'll be there on Wednesday. Maybe you can stop by on Wednesday.
Good, Gary. And thank you again for letting me be on your Tuesdays with Gary.
Well, before we shove off, I want to remind our viewers a couple of things. I'd like you to make sure you check out our Facebook page, Gary Lanham Group. I'd also like for you to check out our YouTube broadcast, which is on the Gary Lanham Group, South Florida. It's shown on the right-hand bottom of the slide. And we have all our social media icons on the left-hand side. And Donn, how can people get a hold of you? How can we reach you?
Donn at DonnRubin.com. You can Google me and go to my website, and you can apply online. Very easy to get a hold of me.
Well, we know that we had this discussion earlier. What's a weekend? We know we're working an awful lot because the market demands it right now. And you certainly have exemplary practice and impeccable performance as far as my deals. And I really very much appreciate you.
Thank you, Gary. It's always a pleasure to share this with you. Thank
you for being with us. And Chitachi, thank you for running our slide and production on this show. And without further ado, we will end this program. And I invite you back next Tuesday for another Tuesdays with Gary on Facebook, Tuesdays with Gary on Facebook Live. Thank you so much, and I bid you adieu. Bye-bye.